Hey there, Sive Morten is here from the ForexPeaceArmy.com. Let's take a look again on the euro currency. So let's go straightforward to the technical analysis, because on the fundamental background, actually, everybody are waiting for a Fed meeting. So as we said, as we discussed in the weekly report, that rhetoric of the Jerome Powell should change. It should become more dovish, because Fed prefers to prepare markets for the next step, and this more dovish rhetoric should have such an impact as slightly greater rate cut. So maybe not the same effect as from the 50 basis point cut, but at least it should be a bit more than just 25 basis point cut and without changing any rhetoric. That's what we're counting on. So based on the technical picture, everything goes just great. Two chances that we discussed for entry. One, it was first we have talked about this on Friday when the retracement happens here. Next, we discussed on the weekend and said if you would like to, you could try to catch minor retracement on Monday and take the position. Both setups worked well. Now we're stand on the way to the upside. Currently, market stands around the COP target. It's challenging this target. So in fact, in the nearest couple of sessions, I would consider a performance of the market around two different tops. This one, the first where market is challenging, but of course the 1825 will be more important. And because here probably some stops exist, and once market will trigger it, it could just keep going higher, just push it forward. So the same performance we have on a dollar index. Besides, on the dollar index, you could see that everything goes great with our suggestion of the free drive pattern. Market starts dropping, and here we keep the same scenario intact. So now everything goes well. Another thing that seems interesting, at least for forecasting of the maybe changing on the rhetoric, if you take a look at 10-year bonds, the target that we have specified in 4 even percents, as we said, this butterfly market is going to the 4% even. That also has happened. And take a look. 10-year bonds. This is not the treasury bills, short-term bonds. This is 10-year bonds. They have dropped since the suggestion is the middle of August for further rate cuts. Take a look for the 35 basis points. This is greater than 25 basis points cut that is suggesting in September. It means that 10-year bonds, long-term yields, preparing for a more dovish policy for the ongoing rate cuts until the end of the year, maybe longer, and correspondingly changing of the rhetoric. That's why impact in general on the markets on the euro currency might be stronger. So it means that euro really could get some additional boost here, because market definitely is pricing in more than just 25 base point cut. On the lower time frames, take a look at the full time frame chart. You could see that market has completed target. Here's this butterfly COP, and now is challenging it. Take a look at also challenging the upper border of the channel. Speaking about nearer standing target, here I would mention probably 127, 18, 11 of this minor butterfly that I also mentioned in our weekly report. This market just keep going to it, and probably it could reach just in a few hours, because just 15 pips difference with the current price and actually this level. But more important here, I would consider the 1850 as the next standing target. Why? Because this is 1618 extension as of this first butterfly, as of the second. They're coincide here. But more important, why this target is important, because take a look, it stands 25 pips above the top, which means that once stops will be triggered, market could show some jump and reach precisely this level. So I would mention this level as a target for today, tomorrow session until the Fed meeting starts. So market could try to reach it. Speaking about the risks in general of this tendency, I would mention this point, because this is really invalidation point for a short-term scenario by many reasons. This is lows around 115.70. Why this is important? First of all, based on this chart, this is important because of the ABCD pattern. If market will collapse, it will erase these lows as well, right? Simultaneously, all butterflies that are forming here also will be erased. Second, if you take a look on the daily chart, this is also has the special meaning as for the hand and shoulders pattern as well. So sudden stop and drop below the C point definitely will be bad sign, right? As well as a bad sign for a possible butterfly pattern that is forming here as well, with the target around 119. We talked about this in the vehicle report. So, by the way, as a result of the fact these targets also might be completed, it's just because market is not at overbought. Here's a free space. So, next boosting some upward direction with the stops that have been placed here. Additionally, with some support from the Jerome Powell comments, we easily could see the reaching of the 1930 target. It's OP as well. Actually, it corresponds to the target of the dollar index free drive pattern that we talked about just a few minutes ago. So that's to watch for. So these levels, as I said, on 4 time frame chart seems interesting as a target for today, tomorrow sessions. Finally, on the hourly chart, take a look. This was our first entry with this drop. Monday we said if you missed it, watch for minor retracement because hand shortest pattern might be formed here. Second entry. Markets now keep going higher. If some retracement and reaction on this nearest standing target still will happen, it's around 118 area. Still some pullback will be. It should not be too strong. And here I would consider the couple of levels. 1750 right here. This level I would treat, well, it is possible, but still currently it seems to be too deep. Although based on the previous logic is bouncing between the lines, it seems that this level is also okay. But in the current circumstances, we're going to payrolls report. I don't think that it will be reached until, if only Jerome Powell will tell something really hawkish. So it might be. But for now, for position taken here, I still would consider this level or even high standing levels that you could plot here as well. So somewhere around 1765 probably also the fib level exists. So these two probably should be enough as a reaction on the target that we could get here. If you have longs, you probably could keep it, just do not forget to move stops. Right at this point, I do not see something interesting for immediate position taking. So either to wait for some minor pullback, see what will happen for the session if you already hasn't taken position here. That's actually probably all that we could do currently. Because at this point, I do not see that's very attractive to take position immediately right at this point. So that's probably all for now. Let's see, situation is promised to be really interesting, and return back to discussion and to update you tomorrow.